get through these as quick as we can. Some of them I received in advance, and I really appreciate it. It gives us more time to look it up. Stephanie and I worked last night to try to find some of them, and we don't have as much detail as probably will be in the bulletin when we print them because we just don't have time. So we're trying to do that in the future as much as possible. Just a reminder, if you have questions, you already know you have the questions that you want answered, go ahead and send them in advance so that we can get them looked up. One of the questions we received, and there's also a similar one that was put in the box, for what are the jury fees collected to the county user fund supposed to be used? Indiana Code 33-37-11-3 talks about the appropriation of the cost of jury fees. So the jury fees are to be paid out of the jury fund for the cost of the jury. After all the claims received by the county fiscal body during month have been paid, the county fiscal body may appropriate any unused and unencumbered money remaining in the jury pay fund to maintain and improve the jury system. And that's kind of a vague kind of thing. We've had a lot of questions, and I think they found some more at the resource table that we'll go over in a little bit, where we answered things like improving the jury room itself, and what our position has been on that. Our IT department can sometimes only find obsolete replacement parts on Amazon. Amazon charges sales tax. Can the county pay or reimburse sales tax in that situation where there are no other options for a purchase? Okay, so our audit position basically is the county should not be paying sales tax for county purchases. If the vendor will not accept the exemption form, the county should file for a refund of the sales tax from the state. That's going to be how you work it out for an employee purchasing and then getting reimbursed. And you would still need to get, if it's a state purchase, you're still going to need to, government purchase, try to get that refund from the state. Is there a recommended internal control procedure for handling State Form 105? We recently learned through a county department that Sam's Club enters the county sales tax exemption information into the employee's Sam's Club card account when the employee presents the form. We called Sam's. They said they do not have a protocol for removing this information from the club cards. We believe this employee is not abusing the exemption. However, what is to say abuse couldn't happen, and when the employee leaves the employee of the county, they will continue to be able to have erroneous exempt purchases. There is really no way to control that form once you've given it to an employee to use for purchases. The best method we can give is whenever possible, set up the account with Sam's Club for the county instead of in the employee's name and reimburse them. Let the county have an account and charge to that account whenever possible. But once you hand that out, you just can't police it at that point. It really is between, if they're getting that sales tax exemption when they wouldn't, it'd be between them and DOR. If they ever did an audit of Sam's Club, they might come back to them, I don't know. But there's really not much you can do at that point if you've given them that form. What is the proper way to title county-owned vehicles? County-owned property, how should it be titled? We have park property and property in the commissioner's name. Your county-owned equipment should be titled in the name of the county. We've seen it with the department. We don't take exception, but it should not be in an individual's name. They don't own it. The county owns it. It needs to be titled to the county. The AFR on the financial assistance to non-governmental entities, does this require a contract? If so, based on questions 1 through 5 on Gateway, do we report on the AFR in this category? I'm interpreting here because I'm not exactly sure on this question. Anytime you're giving assistance to a non-governmental entity, there should be some written agreement between you. It might be a contract, it might be a grant agreement, but something that's telling why you're giving them that money and that they're going to agree to use it for the purpose it's given. So again, the money that is spent should be for a county purpose. It might be recreational, fire protection, EMS, transportation. There's a lot of things that go on that. The 5 questions are helping you decide whether you're actually paying a vendor or you're giving a donation or grant to the person. So if you're getting specific services, fee for service, you're paying someone for services, and you have a contract, then you're going to show it that, as opposed to if you're just giving them upfront, here's $10,000 to run this program. And that's what those questions on 1 to 5 are supposed to guide you through. On the AFR, the schedule of officials.
We have a question.
Okay, to go back to the county-owned property, titled vehicle, that kind of thing. I think a lot of counties have questions because, okay, the vehicles, mainly vehicles, are titled within the county, but it's under county departments, and I think they're looking for clarification if
we will not take exception to county departments as long as you have control over that inventory, over that equipment.
So it doesn't have to be specific to county board of commissioners, or, because that's been a lot of the big fight, and in our county specifically is the sheriff will say, no, those are my vehicles. Don't put them under the commissioners. But I think that there was an understanding that blanketed those vehicles should be titled under the Board of Commissioners. Or
that's going to be an internal, we're not going to take exception. That's going to be an internal management decision. You're going to need to work with your insurance company to make sure that they're covered by insurance, and how they need to be titled for that. I mean, you know, but ultimately they are under the direction of the county sheriff, but they are county-owned vehicles. Okay, back to the schedule of officials. If that information could roll over so you don't have to redo it. It's possible that could be, I mean, technologically it's possible that can be done, but Gateway is used by all of our local government units except the schools except for their ECAs. The problem with rolling the data forward is that we found that if it's there, they all don't check it. They just leave it, and so it's just incorrect information going forward. So I know it's more work for you to have to put it in each year, but it's the only way we can make sure that it is current data. Are we still required to keep the commissioner and council members in the big books? We don't care how you keep it, as long as that's going to be a county decision. I've seen them in binders, just, you know, word processor and stick them in binders. Those are permanent records, so you want to keep them permanent, but we're not going to take exception whether it's, you know, the size of the book you're using or, you know, however, if your county chooses to use those, that's fine. Can I use my cumulative capital development fund for expenses other than highways? The simple answer is yes. If you go to the statute on cum cap development, which is in here, 36-9-14.5-2, there are 15 separate statutes that give authority for cum funds that range from highway to voting to park. Long as you should look at what your ordinance, however it established that cum cap fund, development fund, what was it established to be used for? And then, yes, but there is more than just highway. Yes, 36-9-14.5-2. And these will be in the bulletin as well, so you'll have them in writing. Council added a donation line in the budget for the pretrial diversion fund. Is that proper? May the pretrial diversion fund be used to make donations to an after prom or to pay city police officers for crowd control at 5K? May the council transfer appropriations to donation line? If the council wants to authorize donations, the ordinance appropriating the fund should list that is a permissible expense that they have agreed upon and the type of donations that they are authorizing. If they want the prosecutor to be able to give that money away, however willy-nilly he or she wants to do so, they need to put that in the ordinance so that you have some authority to pay, and then they can defend that because it's a public document on how to do that. But if it's not in that enabling ordinance, then they're restricted to what's in statute. And in statute, which is in, I'll try to do this slowly, 33-37-8-6, subsection B, It has 9 reasons, and I'm not going to read all the 9 reasons that you can use the pretrial diversion, but the 10th one is any other purpose that benefits the office of the prosecuting attorney or law enforcement and that is agreed upon by the county fiscal body and the prosecuting attorney. So those two departments have to agree, and they have to document somehow it's benefiting either the prosecuting attorney's office or law enforcement. Can the county prosecutor submit their claims directly to the commissioner for approval and bypass the county auditor? No, they cannot. Indiana Code 36-2-6-2 states, a person who has a claim against the county shall file an invoice or a bill with the county auditor. The auditor shall present the invoice or bill to the executive, which shall examine the merits of the claim. The executive then may allow any part of the claim that it finds to be valid. There is a process that by statute, everyone has to follow that. Can a county commissioner do an audit of the clerk's office? We're not sure what you mean by audit. I mean, are they capable of doing one? I don't know if they have the knowledge to do it. But Indiana Code 36-2-2-17 does state the executive may audit the accounts of officers who deal with money belonging to or appropriated for the benefit of the county. So if they have questions about the clerk's monthly reports or they have some specific question, they have the right to look at those records.
Lori.
Yes. Owen County, you've had your limit.
Sorry.
Go ahead.
It's a mess. So, question about that is, under that, so we do have a commissioner that does want to audit our clerk. So in that, guys, does he take precedence then, or as far as getting all the paperwork together and those types of things that it has to be done right now, he's standing in your office, or can that follow just like the general public asking for
I
information?
think it would more
and
likely
you've got-
follow that. Now, convincing your commissioner of that is something, but the clerk's
Right.
office should not grind to a stop because he wants to look at stuff. He should have specifically what reports he wants to look at, copies of bank statements or whatever he wants. It's no different than we come in. We don't stand at your counter and say, you cannot do another, I hope we don't. You cannot do another
no.
thing until we have everything we need. Needs to
Right.
work with the office to get the records he wants to look at without impeding the progress of that office.
Perfect, thank you.
Can the county commissioners dictate to the county auditor the internal control policies and procedures for his or her office? Thank you, I get to talk about internal control. Okay. The commissioners have to adopt the minimum level of internal controls. That was the first step. That goes through the commissioners. They need to ensure that training is done. So they are in this loop on that. Each elected officer and the department head, they need to work on the policies and procedures for their office. When the time I think that the commissioner's involvement becomes critical is when a control policy or procedure crosses between two offices. Like if you've set controls for how you want claims to be, and your departments are saying absolutely no way, not doing it, then the commissioners need to step in and go, this is how claims are going to be processed from the department to the auditor. But within the office, the internal, those are going to be, they can monitor that you've done them, but they can't any more than I could write them for you. They don't know the details necessary to do the internal controls. If they feel there is a deficiency in your internal control, they can bring that to your attention, but it would be then up to you to determine how you want to address that risk, just as if we would consider it, if we would tell you there's a deficiency in your internal controls, would be up to you then to address that risk and determine whether that is something you need to change procedures on. Does that make sense? Because I can talk on internal controls until you guys can shoot me. Okay. If a taxpayer failed to file their pink slip for the homestead credit way back when and has now filed, can the auditor go back 3 years and refund the credit? I am going to check on DLGF with this before I print it in the bulletin. Last night, late, after your wonderful, wonderful party, I went back and I looked at Mike Duffy's presentation in 2015, and he had a slide that says if someone failed to file a verification form and the homestead deduction was removed, and he had 12 pay 13 or thereafter, and the person subsequently provides proof of their eligibility, the deduction must be reinstated. There is no statutory deadline for the taxpayer, no interest is due, and there's no statutory obligation to file a 133 form. So I'm going to check with the LGF again on that, but that was their guidance back in 2015. Question? I'm not DLGF, so I may not be able to answer.
I know. I just wanted to say that I have emails where I have addressed this with Mike Duffy's predecessor, and he sends me this same document. We have had that situation, and we've had it recently. And in Johnson County, we have taken that to heart. We have gone back from the date that it was removed forward. So just sharing, we have followed up on that. So if it is different, it's kind of important we know. I think I have 2 pending now.
We would not have any. We would defer to DLGF on that. So I will check with Dan and make sure that that is still their position. But as of 2015, that was still the guidance they were giving. Okay, this was the one that's similar to what I already did, what can be paid from the jury pay fund, and I already gave you the statute on that. They also found some information from our bulletins. Why wouldn't meals qualify to be paid out of the jury pay fund? And this is going to 33-37-10-1. Is specific to what the juror is to be paid. The juror is to be paid mileage and then an additional payment of $15 for each day in attendance and until impaneled. When impaneled, the jury is paid $40 a day. The fiscal body may adopt an ordinance to pay from the county general fund additional fees such as meals. We are doing some changes to our jury room, moving the jury bench to the opposite side of the room, moving a monitor. Would this qualify to be paid for the jury pay fund? The statute that I gave you before provides that the county fiscal body shall appropriate from the jury pay fund to the court served by the clerk an amount to supplement the cost of jury fees after those claims have been paid. Then they can appropriate it for any unused and unencumbered money to maintain and improve the jury system. If they can document how these changes are maintaining or improving your jury system, we're not going to take exception. Just make sure they put that on there. Do claims for tax refund on the 17T and surplus tax claims need to be approved by the commissioners? Oops. Sorry, this one's pretty long. Okay, if you go to 6-1.1-26-2.1, it talks the process for the approving or denying a claim for refund. What they've highlighted for us is the county auditor, the county assessor, and the county treasurer approve the refund. The county auditor shall issue a warrant to the claimant payable on the general fund for the amount due under this section within 45 days of the approval of the claim by those 3. Okay. For the surplus, and I'm not going to read the whole thing, the very last section in there is no allowance by the Board of County Commissioners is required for tax sale surplus. Is the recorder's sworn statement on the recorder's perpetuation fund still a requirement for the budget? Basically, the recorder perpetuation fund, as you all know, can be paid without appropriation, and it is to be used for the preservation of records and the record-keeping system. That is the primary purpose of it. There was additional statute that was enacted in 362710, which is the general one, 10.2, talks about this. If there is an excess balance in the fund, and this is the recorder's determination that there is an excess balance in the fund, and they sign out a statement and swear to the fact, basically, I'm not going to read the whole thing, but basically they're saying, I have enough money for my preservation of records and maintenance of my record-keeping system, and I am certifying that X number of dollars is available above those needs, then the county council can appropriate that excess amount for the operating cost of the recorder for the next year, for 1 year. Each year, they go through the same process again. So yes, they have to go through that statement each year. What we have told the recorders, and as you realize, it doesn't work in real life the way it works in our nice, wonderful utopia world here. The council cannot push the process backwards, or should not. If the recorder doesn't sign that sworn statement, then no money should come out of the Recorder's Perpetuation Fund for operating expense of the recorder's office. What we have heard has happened and may still be happening, and you guys get sucked into it, is they just reduce the budget for the recorder's office to zero, saying if you want any help, you're going to use your Recorder Perpetuation Fund. We can't really fix that. We can advise that if they're only going to pay your salary, you don't have any help, then worst case scenario, you're not doing, the recorder can't do their job. And when the citizens start complaining because they can't get to their deeds and they can't get to their mortgage information, then maybe they'll readjust that. However, you work in between that is up between the recorder and the council. But if we come into audit, we're going to expect to see that sworn statement. A local utility certifies to us hundreds of liens a few times a year. The legislation requires the county auditors to add the lien to the tax duplicate for collection with the May installment of the next tax cycle. Our tax software does not allow the addition of charges for the next cycle until after we settle the second installment collections from the current cycle. If possible, it is possible that if certified to us in late April, early May, we may not be able to add charges again for 8 months. Is this merely a shortcoming in the legislation, or should we be administering this differently? Third option, it might be a shortcoming in your software. I don't know. The statute says that you are to no later than 10 days after the utility officer, no later than 10 days after they have recorded those liens, or to give you that certified statement that you are supposed to put on your collection with the next May installment. It doesn't give you a lot of guidance beyond that. So we're not going to take audit exception, so you're going to have to work it out the best you can to get that information in there. I think the concern I would have with the 8 months is that lien's already recorded, and they can't get that lien released until they pay it. They can't pay it to anybody but the county once that's done. So if there's no way to go into the treasurer's office and pay that lien because it's not on the records yet, that could be an issue. But you're going to have to work out how that process gets done, how you administer it, how you work with your software to get that done. One of our duties as auditor is to be clerk to the commissioners, which includes attending their meetings. When the commission holds an executive meeting, what is our role? It doesn't change. The county auditor shall attend all meetings of and record in writing the official proceedings of the executive. Same job that you have with any other meeting. Do we as auditors have a role in the redevelopment commission, such as clerk? The redevelopment commission shall hold a meeting for the purpose of organization not less than 30 days after they are appointed, and after that each year on a day that is not a Saturday, a Sunday, or a legal holiday. They shall choose one of their members as president, another as vice president, and another as secretary. These officers shall perform the duties usually pertaining to their offices and shall serve them from the date of election until their successions are elected and qualified. You are not the secretary for the redevelopment commission, unless they appoint you to it, which I don't think I would accept. But. What is the first year a certificate of credit may be issued to a disabled veteran that files for the deduction but does not own real estate? The year of filing for the deduction of the following year. I'm not going to read the whole statute about that, and I can also double check with DLGF on that. But if they don't own property, then they should be able to get that filing the year that they ask for it. All you're certifying is that they're not getting credit on their property tax, so they can use it on their excise. Should the commissioners approve payroll before it is issued? For example, payroll is paid on Friday, commissioners approve the claim docket on Monday. Nothing should be paid before it is approved by the commissioners unless you have an ordinance that follows Indiana Code 36-2-6-4.5 on claim payments in advance of the board allowance. When you read that through that, payroll is one of the things listed. I'm not going to read all of it to you, but you have to follow that ordinance. If we see something that's been paid before it's approved, we're going to ask you for that ordinance and see what was allowed, if that was an allowable expense from that. We got some questions about geothermal deduction, and I'm sorry, I'm not even going to try. I'm going to send those over to DLGF. They said they would do a questions and answers from this and post it, so we'll try to get that back to you. If you print letterhead or envelopes, does this come out of a printing or office supplies
Lori.
line item?
Excuse me.
Would you repeat that for the payroll, the statute?
The payment in advance? 36-2-6-4.5. Letterhead or envelopes, how you classify your expenses, we are not going to take audit exception to. We're going to defer to you on that. If you think it's supplies, if you think whatever you've set up, the budget is what you're working with. So if your department set that budget up, they must have some idea of what they're going to put through those expenses. But we are not ever going to come in and say, oh, no, this should have been here, not there. How you classify expenses, unless it's obvious, like you're putting personnel expenses in supplies or something, we're not going to quibble over which line item it comes out of. So either is allowable. Is there a dollar limit for office equipment in the 400 series? Is it per policy by county? And I'm not exactly sure where we're going with this. If you have purchased a capital asset, which means that it's going to, something you have determined in your capital asset policy is going to last longer than a year, a truck, a heavy piece of equipment, it needs to be capitalized. You will capitalize it based on the threshold in your capital asset policy. There is no statute that sets that. That is set by your unit. So equipment could be anything. Whether you capitalize it or not depends on what your capital asset. So if you buy a $1,500 laptop and your capital asset threshold is $5,000, it's going to come out of equipment, but it's not going to go on your capital asset detail. However, because it's a highly convertible product, it goes out the door rather easily. I'd have an inventory tracking for it somehow, who it was issued to, what the serial number, so you can track it that way. If you buy a bulldozer, and I don't even know what they cost, and it's $50,000, it can still come out of equipment. It's just going to go on your capital asset policy because it's going to be above your threshold, I would hope. We are going to have capital asset seminar or presentation at the fall. We already have that person set up. I know county employees that work elections should go through payroll because it's wages. What kind of withholding should be held out? Just Social Security and Medicare. Okay. We cannot answer for the IRS. We cannot stand up here and tell you because the rules, and I can send whoever this is, I can send you links. Go to www.irs.gov and put election workers in there. It's going to bring it up. If your state has signed an agreement, which at least back in 2007 Indiana had, then you may not have to take, there's a threshold that's established that where above that threshold you have to take out Medicare and Social Security. It's below, you don't. You don't have to withhold from election wages. However, it is income. It has to be reported. If it's reported, it needs to be on a W-2. And the rules just go on and on. So each individual thing, you have to look at it. The big important thing to remember is what they said in the first line of this. If they're an employee of the county, then when they work, this is additional wages. Now, you need to check with Department of Labor whether or not this entitles them to overtime or it's considered, election work is considered totally separate. But the wages are coming from the same, the compensation's coming from the same source. It needs to be on a W-2. Our sheriff has been bringing me donations for a canine dog. We have been putting the funds in a canine donation fund. Do these funds need to be appropriated? The default position is that anything that you pay needs to be appropriated unless there is a statutory authority to pay without appropriation, like Recorder's Perpetuation Fund. However, our audit position has been if donations are given for a specific purpose, canine dog vest, and you spend the money in accordance with that donor's wishes or group of donors' wishes, we are not going to take exception if it's not appropriated. If they give you some general donations, we just want to support the sheriff's department, just use it whatever the sheriff needs, that should be appropriated. Should employees be taxed for employer-provided cell phones if used as personal only or business only? This is an IRS question. I know at one time they were. I don't know that it's changed. Getting all those accountable plans and everything else. So again, www.irs.gov and plug in cell phones and see what they say. Must departments use a Form 99A to document an employee's service record? Should service records be kept for part-time employees? The 99A is a prescribed form, so it needs to be used unless you have an alternative form that has been approved or that you want to be approved to take its place. Part-time employees, if they earn time off, you need to track their paid time off. If they don't earn it, then there's no reason to track it. There's nothing to track. Why are we required to have all offices fill out a Form 144 when the same information will be put on the budget Form 1? The Form 144 is the prescribed form that we prescribe, State Board of Accounts, not DLGF, they don't care on this. We prescribe it. It fulfills the requirements of Indiana Code 36-2-5-4, and I'm not going to read it in essence of time, but that's where it says you will get from each department what they are projecting their need for number of positions, compensation, and that form is how you gather that information. There could be an alternative form you use in its place, but you have to gather that information.
Can you repeat that statute, please?
36-2-5-4. This is the one that starts out before July 2nd of each year. They provide this information to you. Do the commissioners have to sign the grant application for state and federal grants? The commissioners should be approving the grants. They have a right to say what affects their county, what grants. So as we talked about, the department head should be coming to them saying, we want to do a particular grant. It involves more than just getting that money. I mean, it is possible for the executives to say, we don't want to mess with that program. Normally, they don't turn down additional monies, but they should be looking at that. For federal, they should be signing any, whether it comes directly from the feds or it's passing through the state, they should be signing any grant agreements because they're the ones that sign contracts with a few exceptions. For state, normally I would say it would follow that. I happen to know with community corrections, they changed their procedures on us and they send those grant agreements to the auditor to sign because the auditor was being kept out of the loop and that was their way of pulling them into the loop. As long as you're in compliance with that state agreement, we're not going to take audit exception. What is the recommended procedure for obtaining the commissioner's signature if the grant application is filed electronically? Whatever your grant or agency takes as effective electronic signature, whether it's yours or the commissioner's, that's what you're going to follow. If it's enough to put in a code or to put it in and certify it or send something, different places do it different ways, but whatever they will accept is what you're going to do. This was from Stephanie's presentation yesterday. What does RFP mean? Request for proposal. And that's where you're inviting quotes. You're sending it out and saying, we have this project, these are kind of the specifications. What are you going to do what can you do for us? That's different than publishing the specifications and taking sealed bids.